Hello everyone, welcome to my channel. I'm the Dividend Portfolio, and today we're going to be talking about Prudential as a potential dividend stock investment. To kind of get started here, we're going to go through the core business of the company. We're going to look at their financial history and financial growth opportunities, their current valuation, their dividend, and I'm going to give some final thoughts and, of course, the disclaimers. So just get started with Prudential is a very diversified company. They operate throughout the entire globe in basically three different areas. So the first area involves their Global Investment Management, or PGIM segment. And PGIM segment has many different services. They provide services for fixed income, for private capital, real estate finances, real estate, different types of investments, and global partners. Many of the revenues generated for the company in the PGIM segment come through asset management fees and transaction fees, and also fees associated with sales of the assets that they're managing. Another large percent of the business is the United States business. And so the United States business is broken up into many different divisions. They have the U.S. Workplace Solutions Division, which offers a variety of products, including IRAs, record-keeping, administrative services, and general and separate account valuations. Furthermore, they also have products like the group life insurance and the group disability insurance, along with individual annuities and a variety of other individual life services. The international business is the last major segment of Prudential, and they offer a number of very similar products, including life insurance protection, retirement products, annuity products, and accidental and health products. So essentially, the company is kind of broken up into these three different major divisions. And interestingly enough, when you look at their investment report, what you can see here is that these business segments are rather well diversified. The United States business and the international business have a very similar percent of the total earning contributions as of Q3. So 42% for international business versus 41% for the US business. And then PGIM comes at about half that with about 17%. So they do have a diversified set of different businesses that operate throughout the entire globe. Looking at specifically their financial history over the last decade, what we can see is, with the exception of the spike in 2012, that generally from the end of 2010 to the beginning of 2011 all the way through 2019, the company's had this relatively steady growth in revenue, operating income, and net income, with actually a moderate decrease in long-term debt over the last 5 years. Looking forward, Prudential is also expected to have some growth going forward. So here what we're looking at is the analyst estimated annual EPS growth through 2022 for Prudential, and also for some other companies in the life and health insurance industry. So specifically we have Manulife Financial Corporation, MFC, and also Aflac Incorporated, AFL. And essentially we can see in this graph here is that Prudential is expected by analysts to have the strongest EPS growth over the next 2 years out of these three companies. And a large part of that growth will be driven from their plans to actually expand their operation throughout the entire globe. Now, Prudential's international business is continuing to develop in Japan, where they currently have over $30 billion in assets they're managing, but they're also seeking to expand in other economies with rising middle classes, and now this includes places like China, Latin America, Africa, and Southeast Asia. Furthermore, the United States business is currently developing end-to-end engagement models to help meet consumer demand. So we can kind of see here from the analyst and from the management Prudential is that the company does have some plans to really promote some growth going forward. But let's actually take a look at the valuation of the company. So this company has an appealing value to actually invest in. And we'll start here with the forward P/E ratio. So we can see here is that all three of these different insurance companies currently have very low forward PEs, and they're all currently well below their 10-year median PE ratio. So we can see here that Prudential's somewhere around the 8 at a PE ratio right now, and they're typically just a little shy of 12. And also looking at the price to free cash flow ratio, we can see the Prudential is doing really strong there. So they are about 1.5 right now compared to their 10-year average of well over 2. And I should say that a 1.5 is still very, very good, even not even considering this average here. Interestingly, Aflac currently has a forward price to free cash flow actually significantly higher than its 10-year medium, and Manulife has a price to free cash flow right between Prudential and Aflac. Also looking at other valuation metrics, looking at the forward adjusted PEG, we can see once again that Prudential comes in very strong, having a PEG ratio of almost 1 here. Manulife is very similar here, and both these companies are significantly less than Aflac's at about 2, not slightly over. Another important metric to look at is price to book ratio. Now this ratio is very important for financial companies, and we can see here that Prudential has a great price to book ratio of nearly 0.5 on a GAAP basis, which is significantly below their 5-year average. Furthermore, this price to book ratio is also quite good compared to these other two insurance companies. Looking at the dividend, we can see the Prudential actually does quite well. Prudential's starting dividend yield is a whopping 5.6%, which is higher than their competitors and is also significantly higher than the 10-year median dividend yield for the company. Over the last 5 years, the company has been growing at 13% on a compounded adjusted growth rate basis, which is nearly double what the competitors have been growing at. In fact, even going forward, the company is expected to grow their dividend at about 6.7% over the next few years, according to Seeking Alpha, which is still great growth with their current starting yield. They have a dividend growth rate of about 12 years, and this is probably where my biggest criticism would come in with the dividend. They did cut it during the 2008-2009 financial crisis. I think it was very understandable given the situations going on there and the situation the company was in. And I think also the regulations put in place by the government, as well as Prudential's reduction of debt to equity, should help keep this dividend secure going forward. And finally, look at the credit rating. We can kind of see this AA- component here, which is a very great credit rating from the S&P, and is really kind of speaks to the security here of the dividend. Also looking at the payout ratio here, we can see that Prudential is still at a reasonable payout ratio here at about 44%, but it is higher than Manulife and Aflac's dividend payout ratio. Furthermore, interest coverage, which is the ability for the company to cover their interest, which is an important metric for how much money they have available to pay the dividend, is at a solid nearly 5 for Prudential, but this is still lower than Manulife and Aflac. I will also add that there are some risks associated with the company and the industry. Now, for the insurance company industry, they are dependent on interest rates, and as we all know, interest rates are low, and they have been low for quite some time. In fact, going forward in the United States and Japan, or large regions where Prudential actually does business, their interest rates are expected to continue to be low going forward. So essentially, this lower interest rate can lead to essentially lower floats for the company, and can also adversely affect insurance company premium. Fortunately for Prudential, they do have a lot of experience dealing with low interest rates, and have also taken steps to reduce their dependence on interest rates. And finally, their PGIM segment is not really dependent on these interest rates, so diversification also helps in this scenario. Furthermore, it's important is for life insurance companies is to consider the fact that we are currently in a global healthcare crisis. The effects of this crisis have actually added to Prudential's costs, and it's important to remember that over the last 9 months, that Prudential has actually experienced over $100 million in extra costs due to the pandemic. But all things considered, Prudential's $100 million in extra costs due to the whole global healthcare crisis is rather manageable, considering how large the company is and the fact that they brought in over $60 billion in revenue over the last trailing 12 months. So kind of taken together here, we can see is with Prudential is that the company is well positioned to recover from this downturn here, and they're also positioned for some growth over the next few years. The company does come at I think, a very great valuation. Specifically, their price to book ratios, their price to free cash flow ratios, and also looking at the forward price to earning ratios and the price to earning growth ratios, I think really highlight how the valuation of this company and just how much it has lagged behind the other industries and also behind some of its competitors. The company comes at a very solid dividend yield of 5.6%, and this dividend also looks rather secure looking at the company's financial history and also their current coverage of their dividend and interest. So kind of taken together, I think Prudential offers a solid source of income for dividend investors. So that kind of concludes my overview of Prudential. If you like this, please give me a like or a subscription. I would really appreciate that. Also, just as some disclaimers, I am not a financial advisor. I am sharing my financial journey for fun and entertainment purposes only. The different types of graphs and models used in this analysis are not guaranteed to be accurate. I do own some of the stocks mentioned today. I recently started investing in Prudential. And as always, please consult a financial advisor and do due diligence prior to investing.